What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at SOFI Technologies, ticker symbol SOFI, on a variety of time frames in anticipation of tomorrow's trading day, Tuesday, January 30th. Well, SOFI here today, up 20.21%, about a point and a half. Of course, posting a beat on revenue, delivering its first ever GAAP net profit to end the year, and also predicting 20 to 25% compound annual revenue growth through 2026. An absolutely absurd day here on SOFI. So since we covered it heading into Monday, we have some new areas to watch, I would say. So this is the 1 minute chart just for context of how ridiculous this move was heading into earnings, then after earnings. Let's take a look at the 5 minute here, and let's zoom in just ever so slightly. What I want to do here on SOFI is take a look at volume. So you can see here, obviously the pre-market volume is down, but you saw volume picking up after the earnings report, kind of fading slightly as we consolidated into the open. And then we saw big volume initially on that move, just about until 10 a.m. Eastern time. Then we started to slow down, kind of consolidate in this upper range. And then we got that pullback through kind of midday here. Now, typically on pullbacks, we like to see as little volume as possible, assuming we're bullish, right? If we're bearish, you want to see as much volume as possible on pullbacks. On this pullback in particular here, intraday, it was kind of interesting. We actually saw two little volume spikes on those slightly larger red candles, but volume stayed reasonably high through this consolidation period. And then we got kind of a lower volume move back to the upside over $9 a share, consolidating into and through the after hours here. Now, if we just look at the second half of the day, that slow grind higher, honestly, ideally, it's kind of asking for a lot. The stock's up over 20% today. Ideally, I would have loved to see that move higher on slightly higher volume, but I got to be honest with you guys, the most volume, the biggest volume candles, I kind of want reserved for aggressive moves to the upside, you know, from a bullish perspective. Moderate volume consolidation, I'm fine with that. What I wouldn't want to see from a bullish perspective is low volume pumps and then massive volume dumps, because that tells us the upside moves are coming from a small sample size of the market, and the majority of the sample size thinks that that stock belongs lower. That's not really what we're seeing today at all. Now listen, if you're coming from a bearish perspective on SOFI, let's say you're positioned short, that probably is what you'd want to be seeing here. So let's move on to the 30-minute chart and try to get some context. I know it's going to be tough because we have that 200 period and that 50 period getting yanked up by today's big move, but still lagging behind, which of course is natural. It's going to be even worse on the 4-hour and the daily. But let's take it one chart at a time here. Honestly, guys, on the 30-minute, I just want to see that 50 period because it's going to move up quicker. I just want to see it get as high as possible, as quickly as possible. Kind of like looking up toward 9. Because that 50 period on the 30-minute, that can act as a potential backstop. And on giant moves, I don't care who you are, I don't care how great the earnings was, it's always good to have backstops. Okay, so let's look at the 4-hour. You can see at that 50, that 50 period here on the 4-hour is just curling upside, but it's going to take some time here. The longer the time frame is, the more difficult it is to yank those up. Now, actually, here on the 4-hour, the 200 period that was previously acting as somewhat of an area of like sloppy resistance. We got some near tests a couple of times within the last couple of weeks of trading after actually giving that up, which was not a great scenario as you have that 50 period aggressively curling downside. But what's actually really interesting is this thing has turned around, I think, quicker than most could have anticipated, leaving us in a situation where not only is the 50 period flattened out, but it's actually now starting to curl upside, and that 200 period has now been broken and kind of held. Now on the 4-hour, listen, I'm not going to say what I want to see because that 200 period is down at 850. I'm going to tell you what I wouldn't want to see from a bullish perspective and what the bears would be salivating over. Okay, the bears right now would love looking at this 4-hour chart to see 850 snap up to the downside. They would love to see it, and a retest and a fade off of it, treating it as resistance. That would open up a potential move back down to the 50 period. Now, but that would basically put us back to where we were prior to the earnings release, which of course no bulls want. So looking to the upside here, there's two levels that I'd keep my eye on as we move potentially higher. 950 is clearly a somewhat psychological level, and on cheaper stocks like this, even 50-cent areas can be psychological levels because, of course, it takes a lot bigger moves to get to each round number. $10, huge potential psychological level. Understand, though, that where we currently stand here, right about here, we're about 3 to 3.5% away from 950, and we're about 8.5%, a little more, away from 10. So, you know, it's a bit of a move, but understand that SOFI is a volatile name, and we've seen crazier things, Exhibit A being today. Let's take a look at the daily chart. This is, of course, kind of like the granddaddy of all charts. Now, listen, see that 50-day and that 200-day moving average? The gray line is the 200-day. The white line is the 50-day. We've been discussing these every time we've covered the name here. By the way, if you want to get future updates on SOFI, I hope to see you subscribe to the channel. This is a brand new channel, branch-off channel from the original Roensch Capital channel. And I will be doing daily uploads here 7 days a week for the foreseeable future. But like today is the day that I think every bull was asking for, but very few bulls likely actually saw coming in this aggressive of a manner. Both the 200-day and the 50-day were reclaimed today in one swift motion. That's beautiful. We were hard up against the bottom, below that 200-day moving average, and today we find ourselves above both of them. That's a really good thing to see. Now, one thing to really consider, though, on the daily chart, the nearest backstop now, this is the one downside of big old moves. That nearest backstop is 8.25, approximately. Now listen, it's not the end of the world. It doesn't mean we have to get suctioned back down there, but understand that if we do, the bears are going to be looking psychologically, right? Down around 8.25, $8 a share, because that, on at least looking at the daily chart, it's something to consider here. So ideally, from a bullish perspective, you know, it's going to take time on the daily chart, but you want both of these moving averages grinding higher as quickly as possible to kind of get some feet underneath the current move. That's the one downside with really massive moves, is everything lags behind. Every potential psychological level tends to lag behind, doesn't it? Now, you options traders, you don't want to listen to this, and even those you just holding the stock, this is implied volatility absolutely has tanked off. Currently at around 75%. Just a couple of days ago here, where we're up 112%. So, listen, whether you own calls or puts, you likely may have noticed that let's say you own calls, for example, the amount of money you made on the calls might not have equaled what you originally calculated just based on the delta move and even maybe the theta decay taken into account, because you saw a little bit of IV crush. Now, if you owned puts, unfortunately you were wrong directionally to begin with, right? You saw a little bit of theta decay, but you also likely saw some IV crush, so you may have lost more than you originally calculated. This is the culprit, implied volatility falling. The same thing goes for if you sold contracts. If you had sold calls, you know, or puts, you may have made a little bit more money than you originally anticipated, or lost a little bit less than you originally anticipated. So IV, listen, don't overlook it. It is a huge factor, and understanding this one thing, I think can, if you're already close, I think that can put you over the edge. Okay, it's a really important Greek. It's the Greek vega, influenced by implied volatility. Now, options chain here today, huge sample size, 1.356 million total contracts traded. 950,000 of those are calls, 406,000 are puts. We're seeing more than double the amount of calls than we are puts today. That's short-term speculation now. 0 to 20 delta, right? 144,500 calls, 219,300 puts. So we're seeing an overwhelmingly bullish overall call put ratio. The very short-term speculation, though, actually leaning just slightly to the bearish side, which is interesting. We're getting a lot of options traders betting in the short term against SOFI through the derivatives here. But listen, if we go down to the 61 to 100 delta range, that higher quality money, those deeper in the money, higher quality contracts, it is overwhelmingly, and typically these are long dated, or at least longer dated, overwhelmingly bullish. Like 216, a little more, 1,000 calls, and only 12,000 puts. Yes, I think you heard that correctly. We're talking something like 18 times the amount of mid to longer term in the money bullish bets compared to bearish bets, which makes sense, right, when we're looking mid to longer term, but that is an overwhelming ratio. Listen, if you got value out of this video, you like SoFi stock, hope to see you subscribe to the channel, and I'll see you in the next one.